Okay, so we'll get started. Just in since we're recording this, we're good to go. Um, and then I will share this the training with you as well,
Awesome.
so that you can have it for your records. I do encourage if you have questions while we're going through the training, please feel free to ask them. There's no stupid questions, and the question that you're thinking about asking, somebody's also thinking about it as well. So please feel free to ask questions. So I'll share my screen with you. And to introduce myself, my name is Emenyo. I work directly for Chenoa Fund, and we partner with SunWest to offer the down payment assistance program to you guys. I know right now you're offering SunWest is offering it to you on the TPO channel, and that's how you're having access to the Chenoa Fund program. Just to give you a heads up, our program is nationwide, with the exception of New York. I am from New York, and it hurts me every time that I say it, but it's the reality. We just don't work in New York. So, real quickly, couple an interesting fact that we found out in our research, especially the ending of last year, was of the loans that were denied last year, 33% of them could have still been saved with some sort of DPA. Now, I will be selfish and say yes, we could have saved it all at Chenoa Fund, but in reality, that's not the truth. As long as you know about the DPA programs that's in your state or that's nationwide, you can save some of those loans. So imagine increasing your loans by 33% that you may have turned down. The Chenoa Fund program, the biggest selling point that I have is we've designed our program to fit around your state HFA programs. So when you think of, okay, your program won't let you go above a certain income limit, well, Chenoa Fund will let you do that. We don't have any limits on our funds. So you can do 3.5 or 5%, and it'll be based on the purchase price of the appraisal. There are a couple key things that makes our program unique and what we like to call niches that we can help fill a need, especially for borrowers. The key thing for you to know is your borrower does not have to be a first-time home buyer to use our product. My favorite thing is because I'm first generation African, they're the DACA. We accept DACA recipients. So we go through just the same thing as the Hispanic community does. And with DACA recipients, we accept them as well, following FHA guidelines. And when it comes to borrower eligibility, as long as you meet FHA guidelines, you meet our guidelines. And a couple things I may tell you here may differ from what SunWest will tell you. But it's pretty much, I would say 98% of the way accurate of what I will tell you. But maybe a couple nuances that may be different. So, as the originator or the broker, I should say, when you're originating a Chenoa Fund loan, the key thing that you need is a first and a second mortgage. In that second mortgage has to meet trade guidelines as well. So you need an application or 1003. You need LE, initial and final CD. SunWest is great where they have their SunSoft system, so everything is done for you internally. Then you also have access to Morgan that can help you with your pre-approvals prior to you talking to the borrower and letting them know, hey, you can use this program or not this program. So you have a lot of tools with SunWest to assist you with the origination process. Pricing and registration of the loans is all done through them. So actually, you don't have to reach out to me directly if you have questions. You have two resources. One is me. I can help you with SunWest. I've worked with them for almost 5 years now. I know all of their top management. Or you can reach out to SunWest directly and they can give you the information that you need. I'm always available. This is all I do all day, and I'll be happy to assist you if you have questions. Disclosures, processing, and underwriting. This is all done in-house with SunWest. They don't send it to us for a second underwrite. Doesn't matter what state you're in, what county you're in. You can do this loan in any state, any county. They underwrite, they process it in-house. And sorry, I'm just letting people. Perfect. They underwrite process it in-house. And when I was saying you can use it in any state except for New York, That includes Hawaii. That includes Puerto Rico. SunWest is the only company that we have approved to do the Chenoa Fund DPA program in Puerto Rico. Closing. Closing, you'll close everything in-house. They'll take care of that for you. Post-closing is when we review the file. We'll review the first and the second, purchase the first from you, and reimburse for the second. So if you don't take anything from this slide deck, the key thing for you to know is you control it as the broker. You don't have to second underwrite the file, and it's a seamless process. It's like you're doing a regular broker deal through SunWest. Any questions for me? And guys, don't be afraid to use the chat. If you want to put them in the chat, don't want to mute yourself, that's perfectly fine as well. Okay, so let's talk about the program. So the program right now is coupled with an FHA first. That's the only one that you can use. And then you have a 3.5% or 5% assistance program. 3.5% or 5% assistance program. That 5%, you have the option of doing 3.5% for the DPA, 1.5% for closing costs, or you can use the full 5% towards the DPA. You have those two options there. The 3.5%, all of it must be used for the DPA. Then the second mortgage is always going to be a repayable second. That repayable second is on a 10-year term at 2% higher than the first. The key is it is 2% higher than the first, amortized over 120 months. They always have to make a monthly payment to that second along with the first like they normally would. Any questions on the assistance for me? Okay. So the DPA, you can choose between 3.5% or 5%. When you're selecting the DPA, what's going to make or break your loan is the cost. What does it cost up front? The 5% may be cheaper than the 3.5%. It all depends on your borrower's profile. So when you're originating a loan, please make that comparison to see which one will be cheaper. From my experience here, the most common product that we see is the 5% repayable second. And the reason for that is the LTV can be at 96.5. They'll break down the DPA to do 3.5% for the DPA, 1.5% for closing costs. We do allow for seller credits, or lender credits. Seller credits, we allow up to the 6% following FHA guidelines. Typically, being realistic, you need anywhere from 2 to 3% seller concessions to complete a Chenoa Fund loan. The DPA is going to be based on the purchase price or the appraisal, whichever is lower. There's no max DPA amount. So, for example, it's not going to be either 5,000 or 3.5%, whichever is lower. It's always going to be 3.5%. We don't have a maximum or minimum purchase price limit. We follow FHA guidelines. So the key thing here for the Chenoa Fund program is payment shock when it comes to credit. The minimum FICO score that we will accept is 600. But payment shock determines what your DTI limit will be. For 600 to 659, your payment shock limit is set at 150. 600 plus, it is set at 175. If your borrower is below the payment shock limits, the DTI is per AUS approval. So that means if you have a 41 over 56 backend and you get an AUS approval, you can move forward with us. If your buyer ever exceeds the payment shock limit, it will require an exception. The exception is done through our QC team. And what you would do is you'll reach out to SunWest for them to reach out to us for that exception. That's how that process will go. We do make exceptions to our guidelines, especially for payment shock, but there are key determining factors that I will let you know about here in a couple slides. If your borrower doesn't pay any rents and they live rent-free, 600 to 639 will require an exception. 640 plus The max ratios is 33/45. That's if they live rent-free. Questions for me on the payment shock? Okay. Home buy education. This is required for anybody with a sub 640 FICO score. Six 600 to 619, they have to use our specific course. 620 to 639, they can use any HUD approved course, including ours. My recommendation is that they always use our course because it's free. It's over the phone with a live agent. It's offered in English and in Spanish. It goes over the benefits, the negatives, and the budget with them on the home they're looking to purchase. Any buyer that uses Chenoa Fund also gets free post-closing home buyer education. That free post-closing home buyer education is offered through the same company. The difference is they will reach out to your borrower. They'll do that for once a quarter for 18 months. They can opt out at any time. They don't have to do the full 18 months. Property types. Oh, go ahead.
Back to the other slide. How long is the education here on this one? The FHA home buyer education.
For pre-purchase or post-purchase?
Pre-purchase.
It's free. All you have to do is make sure the loan is registered in the portal and the borrower doesn't have to pay to take the course. So is the post-closing home buyer education. That's also a free service that we offer to them too as well.
Is it an 8-hour course?
No, it lasts for about an hour and a half, and it's with the live agent over the phone.
Thank you.
Property types. Property types we accept are your standard single-family residence, like townhomes, condos, modular, detached, attached, and even manufactured homes. Manufactured homes has its own set of overlays. I will send you a follow-up email that will have those overlays in it. Please make sure that you're double checking those as you're originating any Chenoa Fund loans. Two units is the max that we accept. Please follow FHA guidelines on those. Then mortgage insurance premiums, that follows FHA guidelines, no additional overlays. LTVs must be between 90 to 96.5. And then high balance is offered, but please, if you're going to do a high balance, please check pricing with SunWest first. That can get a bit pricey, especially for down payment assistance. Any questions for me before I move forward? Okay, income limits. The qualified income limit for a Chenoa Fund is 135%. And that is based on the qualifying income or application income or 1003 income, however you like to refer to it. But let's say you have a borrower that exceeds that income limit. That is fine. If they exceed the income limit, they can still use the DPA program. The key there is there will be a pricing hit to them to exceed the 135% income limit. And that pricing hit is a quarter point. So just make sure that you're aware of that if your borrower exceeds the limits. So to check the income limits or to check the what 135% is, you'll go online to huduser.gov. On this website, you always use the first option. So access individual income limit areas. So we'll click there. And then we'll do California. And let's do Los Angeles County. And view county calculations. The income limit is based on, to find the income limit is based on the household size. But then whoever is on the application, that's who we're going to use to determine if they're above or below that limit. The base number of people in a household is 4 or fewer people. So for example, you're going to be looking for the median family income, which is 91,100. And then the first option again is the very low income limits, persons in family 4, which would be 59,550. I have the spreadsheet here that I'll send to you as well to help you with your income limit calculations. So let me do that. Okay. On this left side, this is where you put in the numbers to find what 135% is. To find what 135% is, it'll be in box 1 or box 2. The overlay for Chenoa Fund is to use the higher of the two. So in this scenario, box 2 is higher than box 1, so your income limit will be 160,785. That's your qualifying income limit. Then you have your the link here to take you to the website, and then the instructions here. Let's say your household size is bigger than 4 people. That's fine. If it is, you just go back into the website, look for the number of people in the household. So let's say there's 6 people in there. So you take the 69,100, put that in here, hit tab, and your new income limit is 186,570. So you have 6 people in the household, only 1 person is on the loan. That's fine. That 1 person just has to be below this qualifying income limit. It doesn't matter if the spouse is working, they have a couple working kids, whoever's on the application just has to be below that limit. If they exceed it, that's okay. It does not stop them from using the program, but there will be a 1/4 point pricing hit. Any questions on the income limit?
Yes. Can you do that example one more time if it's a family of, let's say, 4?
Yeah. So if it's a family size of 4 or fewer people, so if you have 1 person in the household or 4 people in the household, you'll still use this 59,550. So you put that in here where it says enter very low income limits. And I'll expand this for you real quick. Hit tab. And now you have your income limit for a household size of 4 or fewer people at 160,785. Remember that the Chenoa Fund overlay is to use the higher of the 2 boxes.
Okay. Thank you.
Okay. Okay. So once you're done with processing the loan, then you'll receive what is called the funding obligation letter. SunWest takes care of all of this for you, but it's in the closing package. Anytime you close the loan, you'll see this document in the second mortgage closing package. The key is to make sure that it matches your second mortgage note. If it matches, you're good to go. No problems, no issues. It does not have to be signed, but we do recommend that you just show that to your borrower. There's a $3.99 admin fee to do any Chenoa Fund loan. That is the fees that we set. Everything else will be set by SunWest's lock desk. So now we're back to the selling points for the program. The key selling points are minimum FICO score 600. We allow for non-occupant co-borrowers. Especially with people like us, we need our parents to co-sign on loans for us, especially with all that student loans that we have. That's something that you can use with Chenoa Fund. And the nice thing about the non-occupant co-borrower is you can use their income to help your borrower qualify for the FHA first. But on the Chenoa Fund second, the non-occupant co-borrower's income does not factor into the AMI calculations. We allow for concurrent home ownership. So if they're purchasing a new primary residence because they've outgrown the old house, that's perfectly fine. They can use the Chenoa Fund program for the new primary residence. But it cannot be used for second properties or vacation homes and etc. Next thing is you can choose between 3.5% or 5% assistance. There's no income limit on the program. So you have a lot of selling points and a lot of selling tools to help you out. And the biggest one I think of all is you control the file from beginning to end. There's no second underwrite. Here are all the details of the program. If you have any questions, please feel free to reach out. Couple of things here is we do allow MCCs on the program. You can do a manual underwrite with the Chenoa Fund down payment assistance, and your borrower does not have to be a first-time home buyer. Next thing is when you're going in for an exception, especially for a payment shock, the key determining factor is the reserves. If you have at least 2 months reserves, there won't be a lot of pushback depending on your borrower's file. If you have at least 1 month reserves, then the rest of the file has to have good compensating factors. Compensating factors that we look at that point will be like AUS approval, job history, a job history of at least a year or more. Then also we're looking at your credit report. How many lates have you had in the last 2 years? And the last key thing on that is the AUS approval. If they don't have the 2 months reserves. Another thing to let you know is that exceptions will not be granted or considered for anybody with low a 620 FICO score. So 620 or more, we can look at an exception. If you're going for an exception also, payments, your DTI cannot exceed 55 on the back end. If it does, they'll recommend that you reduce the DTI below 55%. Here's my contact info. I will open this up to you to see if you have any questions for me. Please feel free to reach out to me at any time. I'm here to help you and assist you. And then somebody's asking, the rate on the second I saw is 2% above the rate for the first mortgage, first loan. Is that correct? Yes, that is correct. The repayable second is 2% above the first. To find the current rates, you would have to reach out to SunWest. They will provide you with the rates. Okay, so I also saw as well the second can be forgivable or repayable. Can you elaborate? The second can be forgivable or repayable. However, SunWest does not provide the forgivable on the TPO channel. And the reason for that is the forgivables are priced very, very expensive. And when you do it on the TPO side, it does not make financial sense for your borrower. Well, thank you guys for joining the training today. I do appreciate that. Yes, Carlos. Yes, the second has a term of 10 years at 2% higher than the first on the repayable second. Well, thank you guys for joining the training today. I do appreciate you for joining. If you have any questions, please feel free to always give me a call. I'll be more than happy to assist you. And then we can go from there.
Thank you so much, Emenyo. I really appreciate a lot of great information, some stuff that I didn't know, and I'm sure a lot of our LOs really appreciate the info.
Yes, we do. Thank you.
Thank you guys. Well, if you have any questions, feel free to reach out, and I hope you have a great day.
Thank you, you too. Thank you so much.
Bye.
Bye-bye. Bye.